Welcome to Profit Potential. Have you ever felt like your paycheck isn't stretching as far as it used to, or that the same $20 buys less and less over time? That's inflation at work. But what exactly is inflation? How does it happen? And more importantly, how does it shape your financial future? Today, we're diving deep into inflation, breaking it down into simple, beginner-friendly concepts. By the end of this video, you'll understand why it happens, how it impacts your everyday life, and what steps you can take to stay ahead of it. Let's get started. What is inflation? Let's kick things off with the basics. What exactly is inflation? Inflation is the gradual increase in the prices of goods and services over time. It's why your grandparents could buy a candy bar for just 5 cents, but today the same candy bar might cost you over $1. Think of inflation as the economy's way of evolving. A little bit of inflation is a sign of a healthy, growing economy. But when prices rise too fast, it can lead to financial struggles for everyday people. In technical terms, inflation measures how much prices increase and how the purchasing power of money decreases. For instance, if inflation is 5%, something that cost $100 last year will now cost $105. While it may not seem like a big deal at first glance, over time, inflation can have a huge impact on your finances. The different types of inflation. Now that we know what inflation is, let's talk about the different types of inflation you might hear about. Demand-pull inflation. This happens when there's too much demand and not enough supply. For example, imagine everyone is rushing to buy the latest smartphone, but there aren't enough in stock. Prices will go up because of the high demand. Cost-push inflation. This type occurs when the cost of making products goes up. Think about rising wages, higher energy prices, or expensive raw materials. Companies pass these higher costs on to you, the consumer. Built-in inflation. This is when workers demand higher wages because they expect prices to keep rising. Companies raise prices to cover those higher wages, creating a cycle of inflation. There's also hyperinflation and stagflation, which are less common but still important to understand. Hyperinflation happens when prices rise at an extremely rapid rate, often due to economic crises. Stagflation, on the other hand, is a combination of high inflation and high unemployment, which can cripple an economy. What causes inflation? So what actually causes inflation? Why do prices rise in the first place? Let's break it down step by step. Increased money supply. When governments or central banks like the Federal Reserve print more money or inject more cash into the economy, it can lead to inflation. More money chasing the same amount of goods and services means higher prices. Supply chain disruptions. Events like natural disasters, pandemics, or political conflicts can make it harder to produce and deliver goods. When supplies are limited, prices tend to go up. Rising production costs. This includes higher wages, increased fuel costs, or expensive raw materials. Companies pass these costs on to consumers in the form of higher prices. Global events. The global economy is interconnected. A drought in one country can impact food prices worldwide, and an energy crisis can lead to higher fuel and transportation costs everywhere. The impact of inflation on your life. Okay, we've talked about what inflation is and what causes it. Now let's get personal. How does inflation affect you? Purchasing power. Inflation erodes the value of your money. Something that cost $1,000 last year may cost $1,050 this year, and your paycheck doesn't necessarily keep up. Savings and investments. If your savings aren't earning a high enough return, inflation can shrink their value. For example, if your bank account earns 1% interest, but inflation is 3%, you're losing purchasing power. Cost of living, housing, groceries, utilities, and healthcare costs all rise with inflation. This means budgeting becomes harder over time. Wages. If your salary doesn't increase at the same rate as inflation, you may feel like you're earning less, even if you're making the same amount. How to protect yourself from inflation. Here's the good news. Even though inflation is unavoidable, there are steps you can take to protect your finances. Invest in assets that grow with inflation. Real estate stocks and commodities like gold tend to hold their value or grow during inflationary periods. Consider inflation-protected securities. Treasury inflation-protected securities, TIPS, and similar investments are designed to keep pace with inflation. Diversify your income. Starting a side hustle or learning new skills to advance your career can help offset rising costs. Cut back on unnecessary spending. Stick to a strict budget and prioritize essentials over luxuries. Build an emergency fund. Aim for 3 to 6 months of living expenses to cover unexpected costs, especially during uncertain times. Why inflation matters for your future. Why should you care about inflation? It's simple. Inflation shapes your financial future. From saving for retirement to planning major purchases, understanding inflation helps you make smarter decisions. By staying informed, you can adjust your financial strategies to maintain your purchasing power and achieve your goals. Inflation is one of the most important economic concepts to understand, and now you know how it works, why it happens, and how it affects your life. Got questions about inflation or other financial topics? Drop them in the comments below. I'd love to hear from you.